But first, I wanted to turn to the Commitment of Traders report. Many of you have probably heard that the banks have gone net long COMEX silver. Big deal, right? Well, it is actually kind of an interesting development to watch. Greetings, land of Arcadia economics. My name is Dave Kranzler, and welcome to another episode of my bi-weekly podcast that I do on behalf of Chris. I suppose he probably wanted me to put in a pitch for one of his sponsors, but we didn't really talk about it this week. I will say that I do know Fortuna Silver very well, and I think it's one of the cheapest producing mining stocks in the mining stock universe. So, Chris, I hope that helps your cause. This week, I wanted to cover a couple of things. First off, I'm sensing a high degree of agitation and frustration from the mining stock investor universe. And I say that because I've been getting numerous emails from subscribers of mine who subscribe to my mining stock journal expressing frustration. They sounds like they're pulling their hair out. They don't know whether to hold, sell, add more. And it's just welcome to the land of investing in precious metals. It's part of what we get when we dive into a sector that has official intervention connected to it. But over the long run, the intervention loses out. And I say that because since 2001, gold has been the best performing asset, bar none, of any of the major investment asset classes. So it just requires patience. And another factor we have on our side is the Federal Reserve, believe it or not, because the Federal Reserve is going to screw this thing up a lot more than they've screwed it up already. And what I mean by that is they've painted themselves into a corner with all the money printing that they've done since 2008. And really, it goes all the way back to 1971. But every time there's been a financial crisis, really starting under Alan Greenspan's remedy for this, and I actually respect Alan Greenspan. He's the brightest of any of the Federal Reserve chairmen that I've observed or that I've read about historically. He's a very bright guy, and he, again, believe it or not, he used to be a hardcore gold bug until he was dragged over to the dark side by Henry Kissinger, who they were high school mates for a while, and he started speaking the fiat currency tune. But he knew deep down in his heart that gold was real money. If you don't believe me, just go Google Golden Economic Freedom. It was an essay written by Greenspan in 1966. And if you haven't read it yet and you're not aware of his background, I think you might be shocked by what that essay has to say. But needless to say, whenever there was a big economic financial crisis globally, Greenspan would put his foot down on the money accelerator, and that would paper over the problem, and it would juice financial assets, primarily bond markets and stock markets. Well, it's gotten to a point where we've kind of run up against the law of diminishing returns, and the way that applies to money printing is that money printing now is gonna cause just one thing. It's not going to help the economy, which it never really did anyway. It may or may not help the stock market temporarily. It will undermine the dollar, and it will cause hyperinflation like nothing the world has ever seen. The other alternative they have is to keep doing what they're doing, continue hiking rates, and they say they're going to reduce the size of the balance sheet. We'll see if that happens. But if they do that, they're going to cause a massive economic depression. And you're going to have a collapse in financial assets. You're going to have a collapse in the economy, collapse in employment, et cetera. It's going to be ugly. Of course, I do believe the last man standing in that scenario will be physical gold and silver. So at any rate, that should give us cause for optimism that at least somewhere between now and the near future, the precious metal sector is going to start rallying again. And I'll show some charts in a minute to explain why I think that could be the case. But first, I wanted to turn to the Commitment of Traders report. So many of you have probably heard that the banks have gone net long COMEX silver. Big deal, right? Well, it is actually kind of an interesting development to watch. And this is the silver section of the Commitment of Traders report. The data comes from the banks who are the banks that operate on the COMEX. I question the ultimate trustworthiness of it, but for the purposes of tracking the long and short positions of the various trader classes, it's probably somewhat accurate. Now, JP Morgan was nailed in, I think it was 2012, for putting trade positions that belonged in swap dealer category, which are the banks, and they were stuffing them into the other reportables. And the CFTC slapped them on the wrist and fined them a whopping $650,000, which obviously is not going to stop JP Morgan from continuing to do the same thing. So I do suspect that that does go on to some extent. But at any rate, let's just drill down into the silver COT report. And this is known as the disaggregated report. So it segments everything into the commercial side, which is the producers, merchants, et cetera. The swap dealers, which are basically the banks, managed money, which are essentially the hedge funds, other reportables, which no one has ever been able to get a clear-cut definition from the CME on what exactly it is, but it's essentially non-managed money pools of capital, like that there actually are managed, but like family offices, probably charitable organizations, things like that. No one really knows for sure, but that's the gist of it. And then the non-reportable position is the retail traders on the, if you're, little guys like us and we go into our commodities account, whatever you use, and you buy, a couple silver contracts or gold contracts or whatever, that it would go into here. So at any rate, what's happened here is you'll see this shows the long and the short position. We don't need to worry about the spreading. And the banks this is as of June 14th. So the cutoff date for the Commitment of Trader data is a Tuesday, and then the report comes out on Friday. Don't ask me why they can't release the report through Friday. It's just what they do. I think it's part of their plan to try and keep the data as obscure as possible, while still being able to say, see, we got full disclosure. But at any rate, so the banks are long right now 48,341 silver contracts. And each contract represents 5,000 ounces of silver. And they are short 41,277. So they're basically net long about 7,000 contracts. Now, this is interesting because, if you go back to 2001 or whatever, the banks historically are usually net short gold and silver contracts. And they're usually swing from sort of net short to really net short. And it kind of depends on, I think, how much interest there is in hedge funds to take the long side, and they just print up contracts and sell them to the hedge, fill hedge fund long orders. And that's why this is a paper market, not a physical gold market, because the hedge funds rarely stand for delivery. And so it's like there's really no physical gold or silver that's delivered. There's a little bit every delivery period, but as a percentage of the amount of paper contracts that trade on the COMEX, it's minuscule. But at any rate, it historically, it is often a bullish sign when the banks go net long silver. I don't know if I've ever seen them net long gold, maybe. And the hedge funds you'll see here, they are net long about, I don't know, a little more than 1,000 contracts of silver. And the trend has been that the banks have been getting a little bit net longer every week, and the hedge funds have been getting a little less net long every week. And it would be really bullish if we start to see the hedge funds go net short. And that may well have happened this week. I don't know. We'll see. And historically, when this when you've seen this setup, this structure in the commitment of traders report for silver, it's signaled that there's going to be a rally in silver, but it doesn't necessarily say anything about the timing. So it's just something to watch. I'm not rushing out and loading up on silver contracts or call options on SLV, but it's something to watch. And if this trend continues, I think there's a good chance we're going to see a pretty strong rally sometime this summer, before Labor Day. So for me, that's right now, that's one thing that's giving me some hope that, this sideways to up and down trend that's been going on in the precious metal sector is going to resolve with an upward move. So the next chart I wanted to show is GLD. And I showed this last time, and I wanted to show it again because I happened to just look at it today. By the way, I'm recording this on Tuesday evening, June 21st. And I was looking at this chart with a buddy of mine earlier today. And last time, if you recall, you probably don't, but that's okay, I pointed out this nice uptrend in gold that's been going on since early March 2021. And I would imagine that this probably would surprise a lot of people because it doesn't necessarily feel like gold has been generally trending higher over the last 15 months. But lo and behold, I assume this chart's not lying. You'll notice I say quote unquote gold. I'm just using GLD because it makes nice charts on my Fidelity trading software. GLD is not real gold. It's a fraud, but that's a topic for another podcast. This goes from the beginning of 2020 to present. And I happen to notice again that this chart keeps extending this way. And at some point, I think it's going to go like this. I think that's the way it's going to break. And again, it's just all the fundamental factors out there: raging inflation, a Fed that's probably going to have to reverse its monetary stance right now. And, I don't know if it's going to happen next week, next month, next quarter, but I do think at some point we're going to see a big move higher in gold. And just to extend the analysis a little bit, here is, get this right. Here's a picture of silver. Again, like with gold, I use quote unquote silver. SLV and GLD for now, they're perfectly fine to use as indexers for the price of gold and silver, but again, they're not real gold and silver, and people should not treat them that way. But at any rate, this is a 10-year weekly, and the reason why I wanted to show that is silver's not in that nice little uptrend that gold has been in. However, if you look at silver on a weekly basis over the last 10 years, it's currently trading and holding on this line above where it's been trading for most of the last 10 years. And you do see a nice bottoming action here. And then we had a kind of a hope rally here with a lot of momentum money piling in. And we've kind of corrected a lot of that, most of it. And we've come down to this line of support. I look at it as a line of support. You can't really see it, but Silver is just above the 200 weekly moving average. And if you notice, it popped above the 200 weekly moving average in the summer of 2020. And it's been holding above it nicely. And I don't have any reasons for why it won't hold above it. And again, it's on the assumption that gold starts to take off. I think silver is going to have an explosive move higher. And again, I don't want to throw any time frames out there. Let's just say in the next 3 to 6 months. And then finally, get to the mining stocks. It's one of my favorite topics. And this is another weekly chart of GDX, and it goes from the beginning of 2015 to present on a weekly basis. Now, the reason why I took it back to 2015 is that 2015 was the last year of that nasty 4.5 year bear market that we had in the sector after it rampaged up to, well, almost all-time highs for silver, all-time highs for gold, all-time highs for the Huey index, GDX, et cetera. And then we had a nice, nasty 4.5 year bear market. But at the beginning of January, at the beginning of 2016, we broke out of that and we broke higher. And again, what I wanted to point out here is that, and I know it doesn't feel like it, and a lot of you probably piled into junior mining stocks after March 2020, or you might have even piled into them here when this move was made, because there was a lot of momentum chasers that piled into it. So, I mean, I'm in the same boat on some of my holdings as well, where I'm below my cost, below my average cost. There's a few that I'm still, up nicely on. However, we are in an uptrend, and I expect this uptrend to continue. And this latest parabolic move that we had higher that we had after the virus crisis that's corrected also, similar to silver, although whereas silver's kind of been in a sideways channel, GDX has actually been in an upward channel. Now, this applies mostly to the mid cap and larger cap producing stocks. GDXJ would look a little bit different, but GDXJ is not a true junior index. And if there was a true junior mining stock, junior exploration mining stock index, which is the area where I specialize, then the chart would probably look a little bit different. However, the reason why this should give us cause for hope is that it's in an uptrend. You saw gold is in a nice uptrend. Silver has been trending sideways, but it's holding above that line of support. It's not a 10-year line of support, probably about an 8-year line of support. And I honestly think, for lack of any other better arguments than what I've presented today, I think now is a time when, if you didn't pile all into, didn't use all your money and pile into the sector here or here or here, this was a short 40% move in GDX. And also, I just point out a nice little, if assuming this holds, a nice higher low for GDX. This is a good place to start putting money back to work or add to positions. And it's something that I've been doing slowly, and I plan to continue doing slowly until it looks like we're more definitively into the next bull leg higher. And I don't really care about timing the bottom and the top. People who say they can time the bottom and tops of markets are lying. What I want to try to do, there at some point, there's going to be a 2, 3, 4 year big move that's going to indices like GDX, they're going to triple, quadruple. Gold, silver, who knows? Again, they could triple, quadruple. I only want to try and get the middle 60% of that. And that's, if you're lucky enough and you can grab that, that's gonna create life-changing wealth for yourself and your family. So, oh, one more point I wanted to make, and that is, historically, I've had my mining stock journal since early 2016. And there's been several up and down periods during that time. And typically, when I start getting dozens of agitation emails, or I start getting a lot more cancellations than new subscribers, which has been happening lately, and that's fine. But that's usually a contrarian indicator to me. So just like when all of a sudden I get a ton of subscribers piling in because they want to play the junior explorers, which have the most upside when the sector's moving higher, and like periods in here, I just get a flood of new subscribers. And then when you see something like this or this, I usually get more cancellations than new subscribers. And that's been happening the last couple of weeks. And again, for me, it's usually an indication that there's some capitulation going on in the precious metal sector. And I have no reason to believe that it's any different this time. So aside from that, I mean, if you believe in the reasons that you're invested in gold and silver, physical gold and silver, hopefully, and you believe in the reasons why you want to have a leverage play on gold and silver through the mining stocks, then I would just say, worst case, sit tight and be right. Because at some point, I think the market, the precious metals gods, are going to give us a reason to have a smile on our face. So that wraps it up for this week. And again, remember, bi-weekly means every other week. And I hope everyone has an enjoyable 4th of July, and just take it easy and do something fun, because with the options that the Fed has, it's probably going to be a rocky road for a while for all of us for the foreseeable future.
Well, thanks again, Dave. Sure appreciate that report as always. And for anyone who would like to get access to Dave's journals, you can find those at Investment Research Dynamics. He does write the Mining Stock Journal and the Short Sellers Journal, and always great to have his report every other week on Thursday. And lastly, before we wrap up, just wanted to mention that again tonight, Thursday, June 23rd at 6 p.m. Eastern, we are going to be doing Arcadia office hours. So if you'd like to log in, ask some questions, Andy Scheckman, Rob Keentz, and David Stein of Kuya Silver will all be joining us. We can talk about silver, the economy, the Fed, mining stocks, anything else you'd like to discuss, we'll be there. So link in the description field below, and hope to see you later.